All right, well, cheers and welcome everyone to Happy Hour with Lincoln. We're on episode number 37, where week by week I do my very best to answer your questions in the attempt to help you become a more professional, a more consistent, and a more well-rounded trader. As always, if you have questions for me, it doesn't matter how insignificant or small you may think they are, just send me an email, support@thelincolnlist.com. It's right up here. And I'll do my best to get them in some of the upcoming episodes. And even if I don't, I will answer you back immediately and do my best to help you out with the questions that you have. Also, don't forget, if you're struggling with your trading, you're battling with consistency, you just don't think you're at the level that you need to be, I'm going to put the link here somewhere. Visit our live trade room. We trade every day live on screen. We have a well-rounded community of professional traders, no egos, and just a great community altogether, so make sure you check that out. Now, I got some great questions on tap today, or at least I think I do. We're going to talk about penny stocks. Penny stocks. I got some penny stock questions. I got some chart time frame questions, and I also have some investing questions. So quite the span of questions. So let's not waste any time. Let's get right on into it. Here is the very first question this week. Doug, I never see you mention much about penny stocks. Do you trade them at all? Do you consider them to be good investments? Many of the stocks you talk about are hard to buy with smaller accounts. All right, so this is like a three-part question, so we'll just deal with one question at a time. So the first one is, I never see you mention much about penny stocks. Do you trade them at all? Simple answer, no, I do not trade penny stocks. Now, that doesn't mean I dislike penny stocks or that I frown upon those who choose to trade penny stocks. It's just something that we've talked about so much in the past with our happy hours and whiteboards, is there's this discovery process. When you start out as a trader, you have to find your niche. You have to find this thing that you excel at, where you really feel comfortable. And that's something that nobody can help you out with. That's why I've always cautioned people about falling trapped to someone's system, because just because a system works for them doesn't mean it's going to fit you and your psychological profile. So the answer is no, I don't trade penny stocks. I know exactly what I'm looking for. I know where my bread and butter trade setups are, and they're just not in penny stocks. Do you consider them to be good investments? No, I do not. Penny stocks are really not that good of investments. Maybe you're going to fall in line or hear a story or two where someone bought a penny stock and it turned into this multi-billion-dollar winner. But most people that are very successful at trading penny stocks, or at least the ones that I know, are mainly short sellers or shorting the pump and dumps and stuff like that, or they're trading them, not with the mindset of an actual investment. Now, the reason that penny stocks, I don't want to say that every single penny stock ever has been a pile of crap. That wouldn't be true. But the reason that penny stocks are so difficult for investments is, think of it like businesses in your community. You know, everybody opens up a business. Everybody comes with an idea. Not everybody opens up a business. We've got a lot of people opening up a business, and most new businesses fail. People come up with an idea. Maybe they don't have a game plan. Maybe it was a good idea to them, but the actual product wasn't any good. So kind of consider penny stocks like that. There's less regulations to get them listed on some of these exchanges, and some of them have some really fancy sounding business names, but they haven't proven themselves. So when you're comparing a penny stock to something like an Apple, well, you know Apple has cash. You know what Apple products are. You know the history and the story, and that's, if you don't, it's easily researchable about Apple. A lot of these penny stocks are unknown, and you know, it's okay to trade some of those if you feel that you're really passionate about the company, but I wouldn't call it an investment. I think if it's going to be an overall investment strategy, solely an investment strategy, you're going to really regret that you did that. There's nothing wrong with adding some of those speculative plays to your portfolio, but overall, no, traditionally, penny stocks do not make great investments. They can make great trading vehicles, but not very good investments. And the last part of that, many of these stocks you talk about are hard to buy with smaller accounts. Now, this is something that's come around a few times as well. And to me, this is irrelevant because it doesn't really make a difference, because it's all about range in a trade. So for an example, when somebody's trading a smaller stock, you look at your account and you say, I have a small account. I can buy 5,000 shares of a $1 stock or 10,000 shares of a $1 stock with my small account. Of course, I don't know what small account this person is talking about. But the point I'm making is, if you buy a $5 stock, you know, 10,000 shares, you may only get a 10-cent move, a nickel move, 30-cent move out of that in a single day, if you're lucky. Now, maybe that's different sometimes with some of these pumps. We've seen stuff recently like ZSAM or whatever it is. You're going to have your consistent pumps out there. That's where your good money is made. But overall, it's a range thing. So you're only getting maybe 20 to 30 cents range out of that. When you look at stuff recently, and if I can remember, I'll post some charts up here just for your quick viewing pleasure. Stuff like NVIDIA, Netflix, Amazon, Apple. Let me take Apple back out of that. It has some range issues. Some days it's good, but some days it's not. Tesla especially. You see monstrous moves on these things where sometimes just one candle, just one breakout candle, one breakdown candle can be anywhere from $6 to $7. And you just don't find that type of range everywhere. So even if you have a small account, like you just bought 50 shares, right? Or less, you just bought 25. You're still looking on a $6 to $7 move. You're still looking at $300 to $150. And these things make several moves like that throughout the day. Also, something else I'll throw in there that wasn't quite specified here is one of the reasons that the bigger board stocks, the beta stocks like that work so well for people is because shares are readily available for them and you have a lot of liquidity. You often see many times when we're speaking about penny stocks, micro caps, low floats and stuff like that, when they reach these levels that you would like to short them, shares are not available, and if they are available, they become very, very expensive for someone to borrow. So to me, that's kind of where I found my strategy was in the beta names. You get the range. It's easy to borrow if you want to short. You really don't need that many share size or a very small account, a large account to trade those things. It's all irrelevant. You're going to get larger moves with the bigger named stocks or the bigger dollar stocks, and it's all going to kind of come out in the wash there at the end. I hope that makes a little bit of sense. Let's move on to question number 2. Okay, question number 2. Let's just move down here to the second paragraph. Just as a background, I've traded for about 4 months part-time with my own money, and I'm now a full-time day trader with a prop firm account of 80,000 USD, trading CFDs. This was the only way for me for now to get enough capital to start trading with meaningfully. I understand that my top 3 priorities are survival, consistency, and finally profits in that order. However, I still want to start planning for the next phase after that. Very well said. Okay, so question 1 here on this 3-part question is, once profit phase is achieved, would you recommend increasing the size of the prop firm account to take bigger positions, or instead start piling up money as to trade my own money? Okay, so let's talk about question number 1. This is a pretty good one here. What do you do? Do you try to build up that current prop firm account, or do you continue to trade consistently in the attempts that you'll have enough money that you'll eventually be able to break ties with this prop firm and open up a standard account? Now, for those that might be watching for the first time or those that are new trading, typically what a prop account is, it's an account that allows people to skip the pattern day trading rule. For lack of a better explanation, you need $25,000 to be able to be labeled a pattern day trader. And for those that may not have access to $25,000 worth of cash, then you go to a prop firm. They will give you the margin to do that. Okay. If you need more information, I suggest, we don't have time in this happy hour to go through that, just Google prop firms and you'll find various types. So in this case, I would think that I would go the route, according to the way this question is worded, I would go the route of continuing to be more aggressive and learn through the prop account. Because obviously you went with the prop account. Again, I may be wrong on this, but I would be thinking that you went with the prop account because you didn't have the 25K. 25K is what is the legal limit there, but I think someone needs more like 30 to 35K to start with. That way you have a little bit of a buffer, because if you go underneath that 25K or you have a bad month or a couple of bad weeks, you may find yourself back under the PDT rule. And it's a really sucky position to be in, to go, ahead and back, ahead and back. Now, it won't make a difference how you trade here. It won't make a difference because you can always, if your prop account grows, then you can take the profits from that later on or close out that prop account as it gets larger, if that's the kind of structured, and you can just open up your account. But I would not recommend that you do the day trading thing unless you at least have 30K. And you at least have to have a 5K buffer minimum, in my opinion, to work through any kind of stuff like that. You don't want to go back and forth for that 25K. So I kind of hope I answered that, and I'll send you an email here to answer it a little bit more in depth and get to know you a little bit better. Number 2, as a successful trader, what is your strategy for all that extra money? Do you invest long-term, build, manage your retirement fund? Do you just pile it up without getting involved in investing? Do you use trading instead of investing to grow your nest egg? Me, no, I do not continue to grow my day trading account. Now, this is something I've talked about in the past before. And this is something I think you're going to see a lot with day traders. There's this element, no matter how savvy you are, you always think, okay, look, if one day I'm trading 300 shares, one day I'll trade 600 shares, then I'll 1,200, then I'll be 2,400. I'll just keep making these sizes huge. Well, there comes a point where you reach somewhat of a comfort zone and you realize that the more risky that you get or the more money that you have, the perception of the way you trade changes. And I think for a lot of us day traders like myself specifically, this is a problem that I've had. I used to have just a 50K account, and then whatever was over $50,000 at the end of the month, that's what I took to live off of. I've since increased that to about 150,000, but usually, most of the time it's about 150, and anything over that I'll take out. The reason for that is because when I have more money like that, I get in the psychological frame of fun bucks. We're like, well, I got 20K I can throw here or stuff like that. Now, again, I'm not saying everybody's like this, but you're going to find that a lot of day traders, what that extra money does is it creates a discipline problem, is what it does. And you start gambling, or you start taking unnecessary risks, and then subconsciously or somewhere along the line, you end up breaking your rules. So what we're really always trying to achieve as traders is being disciplined. If you can be disciplined, everything will make up for itself. Now, at some point, if you're like, let's say, penny stocks, if you're trading those, there's going to get to a point where you're not going to be able to move 400,000 shares of a penny stock, or try to get that kind of liquidity in and out from a retail brokerage. You're going to have trouble getting that type of fill. But for most of us, I think the answer to this question is I don't let my day trade account build up because it's an account that's there, so I only really have margin capabilities to trade with, so I have flexibility, but once I get to a certain amount or it gets too high, then I get a little bit too sloppy with my trading. Also, it's good to pay yourself consistently because you want to make it feel like it's a job for you, right? So I don't need my money right now whatsoever. I've got plenty of it in the bank, I have plenty to pay my bills. I live a very modest lifestyle. So, I could just leave it there and let it grow and let it grow. But if I don't take it, I got to take it out every month. That way I feel like, okay, I'm paying myself. Like I'm disciplined. You feel like I'm in a routine. I'm getting paid. I hope that kind of makes sense to you. You want to pay yourself. That's what you're here for. As far as investing, yes, I do invest my own money. I'm not a Warren Buffett kind of investor. My forte is definitely day trading. But I do manage my own money. I find a couple of stocks that I like here and there. Very little, but I do manage my own. So I think I've answered. Yeah, I think I've got that. Okay. And I do put money into my retirement account that I make from my trading profits. So my retirement account, I do deposit the max every year according to the tax code. And then the last, once I get comfortable with trading stocks, should I diversify by starting to learn to trade other products, futures, forex, etc.? If so, which ones would you recommend? No, 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 no. What I'm really saying is no. If you have become very good at something, you don't need foreign currency. You don't need stuff. Now, if you want to try something else because you think it's an addition to being diversified with your portfolio as an investor, or something appeals to you and you want to add it to your toolkit, go ahead. But it's not necessary for you to do that. As I said, traders are very specific about what it is that they do. You're going to have traders that, and this is what's crazy about stock traders. You might look at somebody who's very successful, $1 million stock trader. They'll be a hell of a great day trader, but a terrible investor. Or you'll find somebody that's a great investor but can't day trade, crap, or thinks day trading is awful. Or somebody who is a very good investor, a very knowledgeable person, but doesn't understand Bitcoin or doesn't understand foreign currencies. Each of these things, each of these instruments are their own animal. And I think we touched on that earlier there about the penny stock. Each one of these are their own specific animal. Once you've mastered something, my friend, you jump on that bad boy and you kick that horse until it's no longer kickable, because so many people struggle in the markets, and that's one of the reasons why they're not successful, is because they bounce from strategy to strategy and they fall for this is the next thing, binary options, that's the next thing, cryptocurrencies, that's the next thing. You don't have to trade anything. People have been telling me for you got to trade cryptos, you got to trade options, you better learn how to trade penny stocks. No, I don't. I don't need to, because I'm very happy with what I'm doing. I make a wonderful living, and that's it. I don't have to learn how to do anything. What I'd rather do is perfect what I'm already doing, if that makes sense. All right, so let's move on to the third question. Last question of the day. I was wondering what time chart you use, 1, 3, 5, or 10-minute chart, and which do you think is the best? Okay, now I put this one in here because I think it falls in line with just about everything I've said today. And the theme I want to put on this is trader specific. Trading is trader specific. It's your business. And because I've always highlighted the fact, and the reason that we started doing happy hours was because trading is about psychology. It's about understanding, building, growing, and all that good stuff. Okay? Time frames, charts, that kind of stuff is also trader specific. Now, personally, I like to use 5-minute, 1 hour, and a daily. Most specifically, a 5-minute and a daily. Because oftentimes when I see, I always like to use the breakout trade. I don't know why. I really don't trade that many breakouts, but breakout trading seems to be a great example. Sometimes you'll get a multiple time frame where it's lining up not just on an intraday 5-minute chart, but also maybe a 1 hour chart. And it also may be a daily or an all-time high 52-week breakout on a daily chart. That adds an element to the trade. Those multiple time frames. You should have some multiple time frames that you're looking at, because that's going to give you a little bit more data and information about that stock, okay? Because if you're looking at this beautiful flag breakout, this wonderful looking chart, and it's a 5-minute chart, and then you take a look over at the daily chart and you realize, oh, it's only 30 cents away from massive resistance that it hasn't been able to clear. Now that's going to change the thought about that stock, rather than, well, it's $2 away or $10 away. It can change how you do it. I like to look at the 1 minute and the 5-minute. Again, they're just quick glances. There's nothing on those charts as far as indicators. I just kind of want to see where price may line up in the future. That also helps you traders with targets. You're looking at your charts, you say, well, where's that next target? Maybe if we break out on this daily, we're going to go even higher. So maybe this trade I'm looking at, it could turn out to be mega potential. I don't know. But that's just for my strategy. I find the 1 minute a little too quick for me. Again, some people master that. Nothing wrong with it. If you're good at that 1 minute, you use that 1 minute. 10 minutes, I haven't found a use for that. It just doesn't make any sense to me. But I'm sure there's a lot of people that use a 10-minute. And it's far be it for me to judge someone on their trading career, like I've been saying the whole time. If you found something that works, do it. Experiment with a couple. If you're struggling right now to find out which one works for you, experiment with a few of them. It seems that, from most that I know, again, in my little bubble of life and the people that I talk to, the room, and most people that I know that are traders outside of my room, they use a 5-minute. Day traders use a 5-minute. I don't know why. It just seems to be a great balance in there. But again, you may look at this thing and find it to be too sketchy as well. Just experiment with them. Hourly is also a very good chart, and always have a daily up just for reference points to see if there's something that might, might be really interesting there. So I hope I've answered all these questions. It was good. I was winded. I feel like it's going to be a long one. I barely took a sip. I barely took a sip of this. What is this? I forget. I don't know. Scotch. It's peaty. Oh, Laphroaig. Get some Laphroaig in here. Memory goes after all this time. So don't forget, if you have some questions, be sure to send them my way. The theme today is everything is trader specific. And this is what makes trading so challenging. You're going to have to spend this period of time in the beginning of your trading career trying to figure out who you are, your trader identity. Once you get that, then you focus on how you can hone in your game. I mean, that's what professional athletes do, right? You got Hockey players, you got a goalie. Does a goalie go out there and try to figure out how to stick handle and score goals? No, because a goalie doesn't score goals. They stop pucks. That's what their job is. So they focus on their job and they become really good at stopping pucks because they're not asked to stick handle. They're not asked to skate past the blue line. They don't need to work on a slap shot. They're a goalie. I think you follow what I'm saying. Be specific. So every trader is like that athlete. It's a specific athlete that trains for a specific function, right? And that's what you're doing. So I hope you guys enjoyed this happy hour. As always, you know where I'm at. Take care. Visit our trade room if you need help. Until next week, cheers.